Welcome back, everybody. Our topic this week, it's a confidence game. This is your host, Dr. Paul Price, for Real Money Pro. Published measures of confidence are available if you look for them, and many of them are free if you want to use them. Many can help predict market action very well, and the key is you have to know which ones act as contra-indicators. Here's one that kind of is hard to judge sometimes. This is the Business Executive or CEO Confidence Survey, and what it's telling you is that CEOs are as vulnerable as all of us. After the market has had a good run, as it did say in '03 and the early part of this year, confidence tends to be pretty high because things have been going well for those businesses. Recently, confidence has dropped quite substantially and very, very rapidly as the market pulled back in August and September. So this is now kind of in neutral territory, maybe just a little bit under neutral as far as I'm concerned. Slightly bearish, but not dramatically so. Consumers are very cautious now. The consumer confidence in the U.S. is as low as it's been in the last few years, excepting right near the very bottom of the market in late '08 and early '09. In fact, consumer confidence bottomed just about exactly the same moment that the stock market did. So this would be considered a contra-indicator. And again, we're at relatively bullish indicator here, but it doesn't mean it's calling a bottom, because sometimes, even though it was at that same 40 mark in late '08, it got a lot worse as the market hit that final bottom. So this is a somewhat bullish right now, but it could be not quite the bottom for it just yet if Europe collapses or something really bad happens here in the US. Individual investors, as judged by the AAIA or American Association of Individual Investors, the percent bullish. This is one that's always contrary in my estimation. When they get extremely bullish, as they are now after that really huge month of October in the stock market, they tend to get really bullish because their accounts have done well. When they get really bearish, as they did, say, last August and September, that was because the market had just gotten slammed. So this is one where when they're very, very bullish, you want to be very cautious, and when they're extremely bearish, it's usually a very good time for you to be buying or putting on positions. Here's one that I really like, the insider buy-sell ratio. This is really valuable in my view. This is published once a week from Thomson Financial, and what it shows you is earlier this year we had a lot of bullish ratios here, and that was a very good time to be buying early this year. Then all of a sudden in April, late in April, as the market hit its peak for 2011, we had an enormous run of insider selling compared to insider buying. And that was telling you, get the hell out of the market. It got the most bearish it had been for a very long time, and that happened very, very abruptly. And you know, that turned out to be right at the top of the market. It would have been a very good sign to heed. You can see what happened since then. As the market pulled back in May, June, July, and especially in August when the market got really beaten up, the insider indicator turned bullish again. So the insiders with their own money, and that's why this is such a good indicator, because it only works when they put up real money. It's just not somebody's opinion or somebody's psychology. This is where they're putting their dollars. So when the insiders are buying more than normal or selling less than normal, it's something to really take into account. What have we learned from all this? We've learned that indicators can help you time the market. The key on everything is you have to know which indicators are worth using at all, and you have to recognize if those indicators are contrarian in nature. Things right now, to me, on balance, are looking a little bit negative. I would be cautious. We've had a big run in the market, and most of the indicators I'm looking at would tell me that the market is due for a pullback. Nobody knows for sure. That's my opinion. What I would say to you is happy trading, and take it with a slight negative viewpoint if you want to go along with the indicators that I'm seeing. Thanks for joining me again today. This has been your host, Dr. Paul Price, for Real Money Pro.